bank. If you would have kept it in your bank, by today it would have been at maximum $25,000 by the interest. But if you would have kept it over here in the Apple stocks, like if you would have applied your money in the Apple stocks right now, it would have been 146 times. That means you would have had $1.46 million. So just compare 25,000. Hello guys, so in this video we are going to discover stock market for the beginners, and basically the set of things that we'll be covering will be what is the importance of the stock market, why are we discussing in this particular video, and then what stocks are exactly, and then giving you the examples of how stocks varies, like how the money flows in, the prices increases and decreases, and then how can you utilize the advantage of the stock. That means how can you apply your investments into the stocks, and then what are the platforms through which you can apply. So basically, briefly, all the sections will be covered. It will be beneficial for you. So first and the foremost important, what is the importance of stocks? Like why should we even talk about it? Like what is the investing in a stock being an option? I have opened this one of the page. As you can see, one of the news, like rising stocks create 300,000 new US millionaires. I mean, this is just to depict you what the stocks are doing in the world, why people should start considering investing into the stock. More than investing, it's not make money quick or get rich quick sort of a scheme. It's applying your money at the right place rather than your money sitting in the bank account. It should be in the stock, so that when the companies expand, when the company's employees work hard, they expand the company, your money also expands just because you have applied into respective stocks. That's it. So what exactly the stocks are, as you can see, the definition will be a stock is simply a small piece of a company, right? Once those shares have been sold, investors can trade the stock. Now to give you an example, Amazon.com, you might have heard. Jeff Bezos, the richest man on the planet, you might have heard. Amazon.com, total net worth of Amazon.com is approximately $1 trillion, right? More than that. And Jeff Bezos owns 17% of the company. That makes him 170 to 190 billion dollar man, making him the richest person. So he just owns 17% of the shares of the company. The whole company's value is divided in shares, and 17% of the share belongs to Jeff Bezos. Remaining 83% of the company belongs to other investors. If it is a public company, because Amazon is a public company, you can go out and buy the stocks. Let's say you can go and buy 0.1% of the stock, right? Once you have bought it, now what happens? How does the price increases or decreases? To give you an example, as you can see, this is the Apple stock chart. Now if I take like what is the current value of the Apple stock, it is 146 US dollars, right? 146 US dollars. But if I see it like in 2004, it was less than 1 US dollars. And then let's say if we move on to 2005 start, it was approximately 1 US dollar, and right now 146 US dollar. So let's say in 2005 you had $10,000 spare. You had two options: either you kept it in your bank. If you would have kept it in your bank, by today it would have been at maximum $25,000 by the interest. But if you would have kept it over here in the Apple stocks, like if you would have applied your money in the Apple stocks right now, it would have been 146 times. That means you would have had $1.46 million. So just compare $25,000 in the bank and the money value of the money decreasing within the stocks, $1.46 million. Similarly, let's take another stock example. This is the Tesla stock. If you would have bought the Tesla stock in approximately, as you can see, let's say in 2019 itself, 22nd November 2019, let's say $10,000 of stock 2 years back, like it's not even 2 years, so 1.5 years back, the price would have increased 10 times. That means $10,000 applied within 2 years would have become $100,000. Let's, if not take like 2 years example, in 2013, I mean, yeah, in 2013 approximately it was $6, and it has grown 100 times. So 8 years back, if you would have put your money in the Tesla stock, identifying Tesla might be a good company, right now your money would have increased like in 8 years 100 times. Whether if you would have kept it in bank account, obviously it would have been, let's say, 2 times or 3 times. That's it. 100 times, 2 times or 3 times. What is the difference? Big difference, right? So it is about identifying which you're buying a piece of the company when you're buying the stocks, right? And you do not have the minimum limitation. You do not need $10,000. Even if you have $5, you can go out and register and buy any of the stocks. The point is to learn in this beginner friendly video is that you need to learn this language of stocks. How do you learn the language of stocks? Not by going out and reading the books, by practically applying your money and buying the stocks and then seeing the progress and then trying to learn how the company is increasing. If the company is worthwhile, you need to, I mean, Warren Buffett is became the second richest man on the planet. Right now is third or fourth, only by investing in the stocks. He had a super amazing knowledge of the stocks, and 80% of the time he spends in reading what about the performances of the company. He identifies which companies may perform better. He puts the money in the stocks, and let me tell you one last thing. I mean, as you can see, Warren Buffett's quote, I would say, if you do not find a way to make money while you sleep, you will work until you die. So here it means, let's say you have earned the money via a job, any other means, some paycheck. Now don't think that this money you just keep it, because inflation is going to increase, the purchasing power of that money is going to decrease by the time. So you need to apply it somewhere. You need to have the art of applying it somewhere which multiplies the money, and a stock being the safest, one of the safest way. Why? Because you are applying the money in a company, and then as the company improves the performances, as the company grows, so their hard work you are utilizing because you now own a piece of the company. That is what the idea of stock is. Now the question will come, how can you invest in the stock? Obviously there are many platforms like Robinhood, Webull, and in fact I'll leave a link down below in the video description to the platform that you can simply download, and it's very easy. You just few clicks of the button. In fact, you'll be getting some deposited amount as well, and you just can start trading as low as $5, right? And then you buy a stock, learn the art of investing, because one day what will happen, apart from like stocks value increasing, like you will be making money somewhere, right? But you do not know where to invest, how to invest. You do not have the idea. So the point of investing into the stocks is to learn the art of stock investing, so that once you have the money, you apply it at the right place. And then do not just think of trading in a day or 2 day or a month. Think of long term. Think of 5-year deal. Instead of keeping your money in the bank account, think of keeping your money in the stocks, so that the price may gradually increase over a period of time as the company improves. So guys, I hope that you found the video valuable. Give a thumbs up to this video if it did. Subscribe to my channel, because it will contain everything about your personal finances, money, stocks, how do you invest, how do you save money, how do you make more money, everything related with your personal well-being. Thanks a lot for tuning into the video. Comment down below for any of the questions you might have, and do subscribe to my channel. Comment down below. We'll be randomly picking one guy to give away $1,000. Thanks a lot for watching. This is Abdullah, and I'll see you guys in the next video. Bye bye.